Hello, thank you for being part of us. You're welcome. Today we are going to tackle preparing for retirement. Yes, we are going to tackle preparing for retirement, early planting, with a subtopic early planting, early harvesting. Yes, early planting, early harvesting. My name is Anthony Mumza. Yes. Introduction. Those are my names. I've done courses in financing and investment. I'm a financial advisor at Britam. I'm also an author. I've written a book called The Way Within. It's a personal development book. You can find it at these stores below on Amazon. You can find it on Amazon. You can find it on Apple Books, Everand, Audio, Overdrive, African Books, Kobo, Storytel. Yes, you can find them you can find that book on those stores. Yes, online. And also, I also do sales and marketing, and also I've done also a course in human resource management. Yeah, so that's it. That's me. So we are going to talk about retirement. Retirement. What is retirement? Retirement is the stage in life when a person leaves work, leaves the workforce, or stops working full time, usually after reaching a certain age or achieving enough financial stability to live without regular employment income. So here we see that someone leaves work and it no longer depends on salary, but depends on maybe investment and the income he has saved or for certain period of time. Yes. Things to consider in retirement. So one of the things we consider is goal. The goal you have. The goal of retirement is to have enough money to maintain your lifestyle and meet your needs without having to work. So that's the main goal. Typical age. Typical age. Which age normally consider retirement? Many people retire around the age of 60 to 67, depending on their savings or pensions rules in their country. Pensions rules in their country, meaning that some countries help people to save when still early, so that they may retire at a certain age. And at that age, they normally expect you to be retiring. So there are some programs they offer, or some saving program they offer, so that you may save, and then at that age you're able to retire, depending on their savings or pension rules in their countries. But early retirement is also possible if one has planned well financially. Now, for example, there may be that program, but for you, you want to retire early because you have prepared for yourself, and you prepared your income early, so that you may have a free life or a financial dependence life. Yes. We go to another thing to consider: purpose. Retirement allows people to enjoy their later years, focusing on hobbies, travel, spending time with family, volunteering, or pursuing personal interest. Yes, you may decide that you save for yourself, or after some time, and then you're just enjoying life. Yes, at that age. Financial aspect. Retirement often relies on savings, pensions, investment, and to provide income instead of salary. Yes, we see here you depend on those things when you retire. You depend on savings, pensions, investments. Yes, they are the things you depend on. so that you may, so in this period of retirement you don't depend on salary. Those are the things you depend on: your salary, I mean your savings and investments. Yes. Lifestyle, another thing to consider when you're retiring: lifestyle. It's also seen as a time to relax, pursue hobbies, travel, volunteer, or spend more time with family, focusing on personal fulfillment rather than work obligation. Yes. So here you enjoy your life. Yes, and with the and you spend with your life with those people, with the loved ones. Yes, planning now. For example, if you retire when you're old, you concentrate on your grandchildren and enjoy life with them. Planning. Another thing to consider: plan. You have to plan for your retirement. Yes, good retirement planning involves saving and investing early. Yes, it involves planning and investing early, managing debts, and creating a sustainable income plan to support one's lifestyle after leaving. So you don't just retire; you have to plan for your retirement and you save for it so that you may enjoy your life. Yes, retirement in short. In short, retirement isn't just about stopping working. It's about achieving financial independence and having the freedom to live life on your own terms. So we see that here you don't depend on your job, and you seeing the in the picture there is a man, an old man, and a grandchild, and his grandchild, yeah, or his grandson. So here he's spending time with his grandson and also just enjoying life. Yes, so here you plan for it and enjoy life. How to prepare for retirement? Build a retirement fund. Now, for example, if you're working, you may be having maybe certain funds, but certain savings you do, but here you plan it you plan for it differently, and you save certain percentage maybe on your salary, and you do what, and you save for that retirement, or you for your side business. For example, you may be having salary, but you decide to make a side hustle whereby you save that money for what, for retirement. Now, for example, with this you use dedicated accounts such as 100 100,000 K accounts. Now, for example, here you may, if you have that money, you may say that every month I top up 100,000 K on that amount, on that what, on that account, so that you may save for that for your retirement. Pensions plans, contribute regularly and take advantage of employer benefits and gift funds. Now, for example, when you're at work, employers may give you some top ups, money. For example, you have performed well, or you have you there's someone who has gifted you on your birthday for some money, or maybe you have achieved certain goal and they have given you some gift funds. So here you those funds you top up on that retirement account. Yes. So here we see an old man enjoying his life on a hammock. Yeah. So this is it. This is part of the retirement. How to prepare for the retirement? Set clear retirement goals. Questions that determine your retirement. For example, at what age do you want to retire? So you have to consider what age you want to retire. What kind of lifestyle do you want? Do you want in that retirement what? In your retirement? Yes. Where do you want to live? You understand which place, because certain places have different lifestyle and different what and different income levels. Now, for example, someone who lives in the village won't spend too much, like someone who will want to spend who will want to spend their retirement in town. Yes, maybe you want to spend your retirement in Dubai, so the costs are different. Yes. So here, how to prepare, manage debts. For example, you have to first manage debts. Try to pay off high interest debts like personal loans before retirement. The less debts you have, the more freedom you enjoy later. Now, for example, you can't enjoy retirement when you have loans and debts. People will come looking for you. They want you to pay them. So you may find that your retirement money, you have spent it on paying debts and what? And loans. So you have to first clear them and then you consider retirement. Yes. Um, how to prepare for plan for expenses. Now, for example, here, things you plan for the expenses in your what? In your in that period where you in your retirement. Yes, live for example, living expenses like housing, for example, renting or hiring houses, food. What will you be eating during that period? Transportation. How will you be moving from places to places? All that money you have to consider it and also to put it in consider. Health care and insurance. Health care, for example, when you get sick, all those income, all that you have to plan for it, and insurance. If maybe your house you're living it or your car has got a problem, how will you cover them? Leisure, travel and hobbies. For example, your enjoyment time. How are you spending it? How will you spend it? So you have to plan for that. Creating a realistic retirement budget that aligns with your income sources. So you have to first see your sources, how they generate for you income, and then you make your plan and your budget. Yes. Monitor and adjust. Review your retirement plan regularly. Adjust savings, spending, or investments if your goals or circumstances change. Now, for example, if you maybe you have been saving 100K and then your salary is increased, so here you, if you're wise, you also increase on your what, on your savings and on your saving on your retirement fund saving. Yes, yeah. Think beyond money. When you think about retirement, don't think about only that I'm going to be investing or saving for the retirement. You also have to plan for the lifestyle you're going to be living. Retirement isn't just money; it's a lifestyle change. Plan how you will spend your time meaningfully through volunteering, learning, travel, or new hobbies. So here you plan for your whole life, because it's not about all money. You'll be living another life. Yes. So how will you be? Why are you going to be sleeping the whole day, or you're going to be remain productive? Now, for example, you may decide instead of you have been now you are an expert, but you have retired. You may decide to train other colleagues of yours, or train young people. So how you're going to spend the retirement, you may decide, and then you plan accordingly. Yeah, start saving early. The early you begin saving, the more times your money has to grow through compound interest. Now, for example, if you start early, for example, someone who starts maybe who started after before 10 years won't have the same results with someone who has just begun after 1 year. Yeah, so they'll have different results. Yes, invest wisely. Diversify your investment across stocks, bonds, and other assets to balance risk return. Uh, As retirement nears, shift towards more stable investment. Yes. So here you have to invest wisely and uh, to invest in things that will not take your money. For example, if you invest in a business, you may find that the business maybe has the house where your business has got the house caught fire, or maybe an accident on the car. Maybe you've been in the business of eggs and the eggs fall down and and you lose the business. So you have to invest wisely. Yes, where to invest. Where to invest now? These are the things where you can invest. You can invest in a business. You can invest in online stocks. You can do bank deposits, whereby you just take your money to the bank. In microfinance and circle deposits, whereby you deposit in certain circles. And also you can do unit trust. Yes, but today we are going to talk about unit trust, because it's among all these, it's one of the most advantageous part, that could is the one that has low risks. Yeah. So unit trust funds, type of unit investment, where investors invest in a diverse range of assets like stocks, bonds, and other securities. A type of investment where investors invest in a diverse range of assets like stocks, bonds, and other securities. So here we see that unit trust, it may be like, for example, I can give an example of a hand. Yes, of an hand, or yes, an hand whereby you see that the hand is one but has different fingers. So different fingers, the fingers are these diverse as they are stocks, bonds, and other securities. So you may find that your money, when you bring it, is invested in stocks. It is also invested in bonds and other securities. Yes. So it's one thing, but it has many fingers or other streams. But the name is one. It's called unit trust. Yes, that's the advantage with it. That's why you see it has low risks. Yes. These assets are then managed by a professional fund manager on the behalf of unit holders. Now, for example, here we are we manage the income for you. You don't have to manage all to see how your stocks are, or how the stocks are performing, how bonds are performing, and securities. So we are the ones that manage that work, that big load, and for you, you just wait for the what for the results, and you track your money. Why is it that for you? Why is it that where do we gain? Where do we gain? Where we gain is that we you become like our partner. So we collectively invest with you. So we share the profits. Yes. As I've told you, we share the profits. So the more the big number, the more you earn. Yes. So that's how we do. We share the profits. You become like our partners. Advantage of unit trust funds, flexible income. So your income is flexible. Uh, you can access it anytime, and also you can invest anytime you want. That's the good thing with it. Cheap, simple to start. Now, for example, our ours start with 20K, and we also have the one for 100,000. So it depends on what you want to start with. Yes, it's tax free. They don't charge it. They don't charge anything. Compound interest. Your interest also makes other interest the next month, so it grows. Yes. Effective cash management. So your cash is managed well by us as professionals. And remember, we are also, as for us, we are Britam. We are also an insurance company, so you are rest assured that your income is managed well. Diverse of products. Now, for example, as I've told you, diverse products, bonds, and other securities. I've told you. Yes, easy access of your money. Anytime you want your money, you can access it, and you can access it from your phone. Yes, your money keeps value. For example, we see that normally some people go abroad and they come back when they change the papers or change the coins. So, but when it's in liquid form, it keeps value. Update of financial literacy. So here we normally give you trainings as our to about your money and how it has worked for you. Yes. How to start? How to start? We normally have two covers, whereby we have group and we also have individuals. And so with the group, you need the initial, national ID, passport, a photo, bank statement, and application form. So it's almost they are the same, but for the group you need representatives. Yeah. So we see here for the individual, we have initial as is the same, national ID, passport photo, bank statement, and also there are some forms which we application form which we give you, which we don't charge, but if they are free, you can ask. We provide them, and then you start your journey of saving or investing. So we see that we our initial is 20K. Yes, we start from 20K, but as I told you, we also have another one which starts with 100K. Yes, benefits of preparations: high investment, high returns in the long run. So we see that when you're consistent and you're investing highly, you're investing highly. Now, for example, you're investing 2 million, you will also have high returns. The 1% of 2 million will be much than the person who is investing in 10, 20K. 1% also, the 20K person will be what? Will be lower. So the more you invest, the more you gain from your money. Yes. Early retirement. Now, for example, if you have started early, like for example, someone who started when he was, let's say, someone you're in secondary and you start saving 20, 20, 20. By the time after 10 years, you really have a lot of money. Yeah. And which is possible because now we saw that some people wanted to join us. That's why we made it we reduced the money to 20K so that it may be flexible and anyone can access it and start the program saving with us. Yes, high chances to attain tangible assets. Now, for example, here you with us, you can anytime you feel like as attaining, you may be saving for retirement, but you're also spending your money on those assets that will help you to have a good retirement. Yes, invest, for example, things which you will enjoy with in your retirement. Yes, invested invest invested investing invested income can be transferred to registered beneficiaries. For example, now if you want to, maybe your retirement, maybe your business has worked for you and you feel that you've been saving and you don't need the retirement fund, you can decide to maybe to give it, to offer it to someone in your family or your child or your someone else if you don't want it. Yes. On death before retirement age, the total accumulation refund becomes payable to the employee's appointed beneficiary. Now, for example, here you may decide that you die before. Okay, someone dies before their retirement. So the person he has registered with us can have the money. Yes, can have the money since they have died. That's the advantage with it, and also enjoying life with grandchildren with your income. Now, for us, for example, when you have retired, and when you have retired and you've been saving, you enjoy your life with income with your grandchildren. But we normally see that most people don't enjoy life with their grandchildren. Why? Because still at the old age, they are still working and they are trying to make ends meet and they didn't prepare well. Yes. Or things didn't work out well. Yes. So when you plan for it and save for it, you may have that opportunity to be enjoying life with your grandchildren. Yes. Why with us? Why with Britain? We have competitive rates, which is 1% on your income. Yes. Financial literacy normally offer trainings about your money and also give you updates how your money is performing. Customer care, so you become part of our family. We grow with you. We update you. We see that we know you update about information about saving and budgeting and also growing financially. Yes, financial guidance. In case you want anything about your finances to guide you, we have financial advisors, and I'm one of them. You can contact us, and we help you and take you through. In case in everything you want to do it, to be guided in just financially. Yes, because some people give us programs how what they earn and how they could manage their income to achieve their goals. So we can draw something for you, and we help you and see that you reach your goals. Because our main purpose as a company to see that people fulfill their goals in life. Yes, we grow with you. We normally update you and we encourage you and inspire you to stay on your course so that all your goals are achieved. Yes, we remind you and also encourage you, inspire you so that you may not fall away from your goals. Yes, we normally push you and see that you reach your goals as you want them to, so that you may be happy and have a good and healthy life. Yes. Reputation. We have been in business for over 60 years in service. So we are here to stay, and we have our assets all over East Africa. Those are buildings and others. Yes. So we are here to serve you. A summary of the investment. For example, of this training. For example, you have to first have the knowledge. Yes, after having the knowledge, you plan. You plan your retirement. You budget. You estimate. But estimating now, for example, how you will be living your what your life apart from the monetary terms or money apart from the money you have, how you be living your life, the whole process, that whole period. So you have to plan it and estimate it how it will be, and then investing. So you have your income. Where will you be investing? Yes, to enjoy life. Because some people, when they retire, they invest in farms and they reinvest in other things. Yes, so that they may live a healthy life and be productive also. Yes, in so another thing, if you want mentors and life coach, we can also help you when you come into our office. We can help you to give you such people who can help you and take you in life. Yes, so that's it. So we normally advise our clients to always track themselves, and also to track their goals and to track which position they are in. Yes, every month, what they have achieved. Yes. And we also encourage them to see that their goals are achieved in time, and or before even time. Yes. So that's it. So that was the training. Thank you for being part of us. That's my number in case you want to contact me. You can also contact us on YouTube. This is my channel. There are many trainings and also other things to learn from there. It's a YouTube channel. Yeah, thank you for being part of us. And also, if you want to meet us in person, you can come at our offices. And that's the location. You can come and find us and may contact us and have our services, because we do also insurance. Yes.